I am going to take 45 minutes and I'm going to change the way you see the markets and hopefully the way you play the market from this day forward. I got 45 minutes to do that. I got 45 minutes to do it in such a way that you'll never be the same as a market participant again. Now, I'm going to take the first 20 minutes of the trading day. We're going to slice out the first 20 minutes of the trading day. I got 45 minutes to teach you how to master trading that first 20-minute period. Now, traditionally, trading the first 20 minutes has been taboo in the markets. When I started my professional career on Wall Street, December 1986, I was told that no traders trade the first 15 to 30 minutes of the trading day because of the excessive volatility. I would go on eventually to break that rule and set records on Wall Street for being the most profitable trader in the first 20 minutes of the trading day. My fame on the street grew because of this talent. That instead of the first 20 minutes being taboo for me, it was where I made 80% of all my money, even though I traded the vast majority of the day. And so my skill of being able to pull money out of the markets utilizing this first 20 minutes, I travel the world transferring that skill to others. In addition to me transferring that skill to others, I do not do that for free. I do it in the form of an exchange, in the form of you trading my capital. So if you are willing to trade my capital, I am willing to teach you how to do this without you risking a single penny of your family's money ever. So I travel around the world giving my money to other individuals, teaching them what to do with that money, and we split the profits. Zero risk to the trader. If they lose my money, I kill them. No, if they lose my money, it's my fault. It means I did not do my job well enough. My top trader has over $30 million, and all the baby ones start off with $50,000. So today, I'm going to give you all $50,000, and I'm going to show you how, with $50,000, you can grow it. Trading 20 minutes a day, just 20 minutes, the first 20 minutes, you're going to grow. I'm going to show you how to grow 50,000 into 100, into 250, into $500,000, into $1 million. I'm going to do it. I got 45 minutes to do it in. Do I have the clicker? Okay, let's go. We're going to need several tools. 5, in fact. $50,000 to start. Number 2, we need a 2-minute chart where every bar on the chart represents 2 minutes of trading. So we're going to divide the market's activity into 2-minute slices. We need a simple 20-period moving average running through that data, and we need a simple 200-period moving average running through that data. And the last thing we need is what I call a tight picture of power, and I'll teach you what that is. Now, here's a 2-minute chart of Facebook. Every bar represents 2 minutes of charts. Obviously, the green bars mean that the stock opened at the bottom of the green and rose to the top of the green. All red bars mean that the stock opened at the top of the red and fell to the bottom of the red, okay? So green bars are up bars, red bars are down bars. Now, we need a 20-period simple moving average, which is going to average the last 20 bars so that we see a 20-bar average, and we want to see a 200-bar average. So there's a short period moving average, a short one, and a long one. Moving average systems, you always want to use a short one in conjunction with a long one. I've superimposed the 20-period moving average and the 200 on that same chart of Facebook. Take a look. The one sloping downward is the 20. The one sort of flattish is the 200-period moving average. Let's talk about the states. When these two moving averages are close together, we call that a tight state. Your stock or Facebook, when those two are close, the market or Facebook is in a tight state. When those moving averages are far apart, Facebook is in a wide state. So I want you to understand that the markets have two states. We flow from narrow to wide and back to narrow to wide. And that's it. It's almost like the market is a breathing mechanism. It breathes in, tight, and then it exhales out wide. And after wide, we go back to what? Inhale. And then after inhale, wide again. Now, we judge these states by the moving averages, the 20 and the 200. So you can have a tight, narrow state with the 20 above the 200, but tight and narrow. Or you can have a tight, narrow state with the 20 a little bit below the 200. Here's a wide state where the 20 and the 200 have separated, but separated to the upside. The 20 is above the 200, and you have from this wide state, you are expecting your stock to drop from a wide state because the drop brings you back to narrow. Now, if you have the wide state to the downside, the 20 has declined away from the 200. You're looking from that wide state. What should your stock be ready to do now? To back up, to go back to narrow. So if you can start by knowing the stock's state first, you've got 85% of this game already figured out. Most problems come from playing the wrong state. Buying after this, after a wide state, or doing the reverse. So get the state right, and you've got 85% of your problems in trading are gone. Okay? Now, let's go back to the Facebook chart. Look to the left-hand side of the chart. Look at the left-hand side of the chart. What state is the left-hand side? Narrow. Your best opportunities come from a narrow state. I'm going to repeat this. Your best trading opportunities come from narrow states. From narrow states, there is usually an explosion out of the narrow state, and there's flow, there's follow-through, there's trending. Your second best opportunity comes from where? The wide state. And in the wide state is when you become what kind of trader? A contrarian. You see, a contrarian. You become the contrarian trader in the wide state, but you are not the contrarian trader from the narrow state. You go with the flow from a narrow state. You go with the direction from a narrow state. After the stock has achieved a wide state, you start to think reverse. I know the stock's down, but we're wide. I'm now thinking up. There's a time to be a contrarian and a time not to be a contrarian. Let's talk about positions. Above the moving average, so you've got a tight, narrow state. Above the moving average is bullish, positive. When your stock opens in the morning, the first bar opens above a narrow state, the odds of follow through to the upside are like 87%. So you've got an 87% chance that if you open above a narrow state, there is more upside to come. If you open below a narrow state, the first bar of the morning opens below, there's an 87% chance of follow through to the downside. Now think about this. That means that out of every 100 trades, you're going to be right 87 times. You're going to be wrong 12, 13% of the time. That's how we're going to always have to protect ourselves when we're wrong. So let's talk about power bars. There are 13 bars the market repeats over and over again. 13 bars. It's like a language. So instead of 27 letters in a language, the market speaks one language with 13 bars. And it repeats these bars over and over again. It doesn't repeat them in a specific order. It might give you bar 4, then bar 6, then bar 1, then bar 13, then bar 10. But there's only 13 it can throw at you. Out of all the 13 bars, these two are the most important. I call them elephants and tails. Elephant bars are sizable, solid green bars that are larger and taller than the vast majority of the green bars before it. Power bar, green. Or you can get a power bar to the downside, red, boom, solid power elephant bar. You see, the institutions move the market. You don't move the market. Your family doesn't move the market. Your neighbors don't move the market. Your friends don't move the market. Institutions with billions of dollars move the market. When they go in, they wish they did not leave they wish they could go in without leaving a footprint behind. But they can't. They're too big. Their footprint, these elephants leave behind, boom, big footprints. This is the footprint of a giant elephant getting out of the market. That top one is a giant elephant bar, a footprint of an institution or institutions getting into the market. The bars at the bottom, the bottoming tail bars, are similar in power to the elephant bars. They're also footprints that the market institutions are getting into the market. So in all four of these bars, the market has moved up. So the bottoming tail bars are an indication that the market was at the bottom of the tail and moved toward the top of the body. All right? The green bar as well, from the bottom, moved to the top. So these four bars indicate money going into the market. And the next four bars represent money coming out of the market. Now, let's take these two power bars and let's start our trading day. Your goal is to take a list of stocks. Let's say you've got 10. Out of 10 stocks on your list this morning, you're not going to play all 10. You're going to, just before the open, select the 3 or 4 that are in what state? You want to say, oh yes, that's right. Out of these 10, these 4 have the moving averages close. Now you've got your 4 to focus on right at the open. Now, you're going to determine, out of those 4, which 4 opens above with an elephant, or opens above with a tail bar, or opens below with a red elephant, or opens below with one of the topping tail bars. So we want these bars below and these bars above the narrow state. And so all this becomes is a waiting game. You select which stocks have the narrow state, then simply watch and wait which ones open with an elephant or bottoming tail bar above, or an elephant or topping tail bar below these narrow states. And when none of your stocks do it, you drink coffee. You let the first 2-minute bar finish. No action in the first 2-minute bar right now. Once that first 2-minute bar has completed itself, you're going to mark the high of that bar off. 1 penny above that bar's high, boom, you're going to put $25,000 of your money, or my money, in the stock that moment, that instant. You're going to take literally half of your account and boom, pile it into the stock. Now, you let the first bar finish trading. You do not let the second bar finish trading. So the moment, the instant, the second bar crosses the high of the first bar, boom, your $25,000 is in, and I want you to protect yourself 1 penny below bar 1. Now listen to this. This is your most important act. Your most important act is to protect the money. Your protection is 1 penny under bar 1, which means that your loss will be limited to the size of 1 bar. But get this, when you win, you might win 20 bars. But every single time you lose 1 bar. But you might win 8 bars, but you'll lose 1 bar. You might win 4 bars, but you'll lose 1 bar. You might win 40 bars, but every single time you lose for the rest of your life, you limit your loss to 1 bar. This is how you stay in this business forever. This is how you almost guarantee success. Most people enter this game thinking that their responsibility is to make money. That is not your responsibility. Your responsibility is to cut the stock when it's not performing. The market's responsibility is to make money. It's a partnership. If you buy Microsoft and it goes up, what did you do except pray? Nothing. You didn't push the stock up. You didn't call Warren Buffett and say, can you buy a few billion shares so the stock can go up? You did nothing. The market's job is to go up. Your job is to sit and cut because the market can't stop itself. Do you understand? The market can go up without you, but it can't stop itself. So it needs you to stop it when it's failing. Your number 1 job is to be a cutter, not a money maker. You see, money shines on everyone, whether you're talented or not. It's like the sun. You can be a criminal and the sun shines on you, or you can be a saint and the same sun shines on you. Prophets are like the sun. They just happen, whether you're talented or not. What you can't mistake is professional losses. Limiting your loss to 1 bar is a professional loss. That's your job. If you do 10 of these, 10 of those, and every one that hits that red line, boom, cut. Out of 10, 8. You'll only cut probably twice. You'll have 8 that just go without your help. Only 2 you'll have to cut, maybe only 1 every now and then. You're looking for 1 of these too. Same thing. No difference whatsoever. Let that first 2 bar form, and you see it forming. It's 1 minute and 45 seconds, 1 minute 55 seconds. Wow, this is a bottoming tail bar. It's above my moving averages. The moving averages are tight. Saliva begins to drip down the corners of your mouth. Mark off the high, 1 penny. Get ready. Boom! 25,000 in, and your protection goes where? Under which bar? The first bar. You're limiting your loss for the rest of your life to 1 bar. The market will give you 8 bars, 6 bars, 20 bars, 15 bars, 3 bars, 2 bars. But you will not allow it to move more than 1 bar against you, ever. Do this and you will be in this business forever. Look to the left-hand side of this chart. Look at your moving averages. What state are we in? I know you know it. Amuse me. Narrow. Look at the first bar of the morning. Gap up above the narrow state. Solid green bar. Which bar do you see where you enter? Once that first bar finishes trading, mark the high of the first bar off. Whichever bar is the next bar to break above the high, boom, gets your 25,000. You're entering, it looks like, on bar 3. Do you see that? Bar 3 is the one that pokes through. Where's your protection? Under bar 1. 2-minute chart of Disney here. That dotted line is the first bar of the day, marks the first bar of the day. Solid, fat, green bar, moving averages tight. Mark the high of that bar off. Which bar gets your 25,000? The second one, your stop, below bar 1. All right, good. We got it. Now, that's the foundation. Trading is not a complicated thing. I want you to think about it. You got 3 directions, up, down, and sometimes sideways. That's complicated? That's primitive. You know what's complicated? The human body. Billions of processes are going off right now. The engine of a Ferrari now, that's complex. The market? No. You know what the essence of trading is? Kicking out those not performing and then staying out of the way of those that perform. That's at the core of everything. But if you get the states right, if you start adding the states to your overall analysis, and you start playing the right bars that indicate this is not a normal buyer, this is an institutional footprint. Institutional footprint in the right location, in the right state, and you stack the odds in your favor. This is how I broke records on Wall Street. They said that it couldn't be done. Biggest gain in 20 minutes, $80-something million. 20 minutes. Said it couldn't be done. This has an 80+% follow-through rate. I've been doing it for 33 years. I've been trading for 38 years. But I've been doing this for 33 years. And it works just like it did 33 years ago. All right. Look at this bar. First bar of the morning. All right? Your moving averages are relatively close. They're not far apart. What are you doing right now? Salivating. Don't wipe. You might miss the trade. Do the trade, then wipe, okay? All right. All right, mark the high off. Boom. Get ready. Boom. 25,000 in. Your protection. Bar 1. There you go. That circle would represent a short-term move up where I'd start taking some profits. My general profit-taking thing is I'm looking for the stock to make 3 pushes. So push 1, like it pushes my profits. Push 2, and then after push 2, I start throwing sell orders ahead of the market so that the market comes to push 3 area and executes me. That's a more professional sell than waiting and then selling when it gets there, getting your order there in advance. Let's take this. Here's another example. First 2-minute bar of the morning, you've got a nice tight state. Now remember, you know before the market opens which stocks have tight states. So you're pulling out of your list. You have a list of 10 stocks. You're pulling out the small few that have a tight state, focusing on that. Now, boom, mark the high off. First 2-minute has given you a nice solid bar. Here's your entry, $25,000 in, protection under bar 1. Boom! 3 push, take some profits. I think we've got this part down. You've got another 25,000. Now that 25,000 in your pocket doesn't do me or you any good. We've got to put that in the market too. So now I've got to teach you how to add to your winning plays. Every master trader adds to winning plays. Every big trader is an adder. You can never be a big trader if you're an ABC trader. A in, B out. No. You want to go in and then in and then in your winning plays. Usually 2 ads. Why do you think we don't put all 50,000 in? Why try it with half and not all of it? Because if this is going to be one of the ones that don't work, I want it to not work on half, not work on all of it. So let me put half in. Let's see if this thing gets some momentum, and then I can add the rest. That's why we only put half in initially. The ad. Let's talk about the ad. Now, we're going to play the color game on the ad. This is very basic. The very first red bar that occurs, a red bar means that the stock kind of softened, went down a little bit. The very first red bar, you're going to take notice. If that red bar does not produce another red bar after it, and a bar takes out the high of the red bar, boom, you're going to add more. So you're going to add when the market removes one red bar. How does it remove it? By trading past it. All right? So just like that, that add arrow is 1 penny above the high of a single red bar. Now, I want you to think of this as like 2 soccer teams. Or 2 football teams, whatever, basketball team, whatever. There's a green team and a red team. And so you've only seen the green team have the ball in bar 1, bar 2. Now the red team gets the ball and produces what? That's it? That's all you got? Now do you see where I'm going? When red shows you that it is very weak because it can't give you, not only can it not give you more than one, it gives you a little one. Now, boom, add when that little one is removed. Now, it doesn't matter whether or not your first bar is elephant, your first bar is tail. Now we're adding the color game. Your entry can be the first little red bar that gets removed. So even if you don't have an elephant or a tail, your first play can be the first little red bar that gets removed. So now you've got 3 things to play: elephants, tails, and little red bar takeouts. Elephants, tails, and little red bar takeouts. Play these 3 things in the right location, in the right state. You've got a money-making machine in the first 20 minutes of the trading day. All you need is money to do it. And I've got the money. So listen, people say, Oliver, why do you travel the world teaching this? Why do you do this? Why don't you just trade? You don't see this. When I'm trading this on Microsoft, what about the elephant bar in the right location in Twitter? What about the tail bar in Facebook? Or the red bar being taken out in Apple? But I'm playing Microsoft. I want not just Microsoft. I want the Twitter one. I want the Facebook one. I want it all. Do you understand? So, listen. But check this out. If I gave you 50,000, you 50,000, you 50,000, let's say you have Facebook, you've got Microsoft, you've got Apple, you've got this. Now, don't miss these 3 things. Now, I've got them all. So what I do is I multiply me. You understand? I give you my capital and multiply me, and we both win. That's why I do it. There's power in numbers. I can't be in every spot, in every stop that is producing an opportunity. But we as a team can. All right, guys, look. Bar opens above. Don't be overly concerned with the gap. The only thing is if that gap is too far, then you're already starting at a wide state. So too far gap, what's the best play? Up or down? This is not that far. That's not too far. All right, mark the high, boom. 25,000 in, stop below the low. There's your first red bar. It's not that big. It's rather small. Mark the high of that bar off. Boom! Whenever that bar is taken out, that's your add. Now, I suggest that you take that 25,000 and divide it into two parts. So you put 12 or 13,000 in and then do another one. There's your profit take. You've got 3 pushes. Push, pause, push, push, out. I'm not marrying stocks off the open. All right, you understand? I'm in and out. This is 20 minutes, 18 minutes or whatever it is. Out, finish, done, go to the beach, all right? Or the park or whatever it is that you do. I do have traders that will trade a good portion of the day, but I want every trader to have my specialty. My specialty is the first 20 minutes. There's your moving averages, relatively narrow, solid, fat. That's an institutional bar. You and I can't produce a bar like that in Microsoft. It takes billions of dollars to produce a bar like that. We know that's a footprint that's going in, and it's a big one. Mark the high off. We got the right state. We've got the right location. Remember, the location and the state are different. Location is above or below. State is narrow or wide. So you want the location and the state correct and the bar correct. Get those 3 things correct, you got a money-making machine. All you need is money. All right. Boom. Enter. Stop. Look at that first little red bar. That's all you got red. That's it. Mark off the high. Boom. There's your add. Playing the color game now. 3 pushes. Push 1, push 2. Throw your order above the market. Let the market come to that push 3 area. Out. Go to the beach. Can you play again if you want? Yes. You see these series of reds going down? The very next time a green bar eliminates red, starts the game again. Boom. Boom. But you must be near the blue 20-period moving average. You can't do the color game that after the first one. You can't do the color game after that unless it's kind of close to the 20. No away from the 20. If it comes back toward the 20-period moving average, the blue line, you can start the color game again. Green takes out red, boom! Where's your stop? Always under bar. There's red. Start the process again. There's your add above a little red bar. 3 pushes up, out. Why 3 pushes? The market has a strong tendency to pause, rest, or reverse after 3 to 5 pushes. But you get 3, obviously, a higher percentage of time than you get 5. So that's why I'll always teach traders, start coming out on 3. All right, you might get 5, but you'll certainly a higher percentage of time get 3. I live where things happen, certainly. This is short-term trading, guys. You're trading the first 20 minutes of the morning. You're trying to earn your living in 20 minutes. You're trying to grab $3,000, $4,000, $6,000, $8,000, whatever it is, in that first 20 minutes of trading. And it's short term. And its accuracy is, the reason for its accuracy is because the term is short. The shorter term trader has a greater chance of being more accurate than the long-term trader, right? And I'll prove this to you. If I were to ask you where you're going to be 10 years from now on this very day of the month, 10 years, you'd have no freaking clue. If I were to ask you where you'd be 1 year from now on this very day, you'd still probably have no clue. If I were to ask you where you'd be 1 month from now, a little bit better, 1 day from now. What about if I asked you, where are you going to be 2 minutes from now? You would get that right every 2 minutes of your life. You will never be wrong. So what if you just lived the market 2 minutes by 2 minutes? If your accuracy is the highest in this 2-minute period, why not live your market life 2 minutes at a time? Because your ability to project what flow up or down over the next 2, 4, 6 minutes is extraordinarily high with what I've just given you. But if I were to stretch that and say over the next week, it would break down. So we live in this high probability, highly consistent window, and then we just put big money behind it. What if, boom, you get a red bar up there? What do? I want to see. You've got narrow state, stock opens above bullish territory, but boom, bearish bar. What do? Drink coffee. Nothing. But if the market removes this bar, you're going to mark the high of that red bar off. If a green bar eliminates that red bar, so if you get this scenario, boom, if the problematic thing is removed, that's your endpoint. Stop below the low. Now, that may not happen. That red bar might produce a second red bar and a third red bar, and it's a nothing trade then. You don't do anything on that trade. But if that red bar is taken, boom, that's your entry right off the open there. Okay. Now, that's that scenario. Look at the first bar opens above the moving averages and produce a red bar first. The second bar removes the problem, and you're in right at the high, right as the green bar eliminates the high of the red bar. Stop below the low. 3 pushes out. All right? And then you can start playing the color game again as it comes back in. Look at the series of red. When does green eliminate red again? I wish I had a pointer, but. And then the move up, out, done. Now, these are not just perfect examples, traders. I can show you thousands upon thousands of charts. Red bar starts off the morning. Green bar eliminates, second green bar eliminates the high. In, stop below the low. 3. Let's follow this trade. You tell me. Which bar is your entry bar? The second one. Where's your stop? How much money do you have in the play on bar 2? 25,000. Okay, what's your next act? Eliminates the first little red bar, add. And then what's your next action? After the push, out, right? And then let's continue. Do you see your next act? The second green bar after that final red bar that dips, right? You got it? Boom, 3 pushes up, out. Most people are overcomplicating this game. They're looking at PE ratios, sales ratios, company management, product sales, product this, projections. It's too complex. When I left the street, every firm began sending me their top traders. I charged them $25,000 per trader per week. And I was booked because I did a maximum of 10 traders a week. I trained Wall Street. 10 traders a week, $25,000 per head. I was booked for 12 years. I perfected how to simplify this game and turn an individual into a money machine. It is not by mistake that I have over 10,000 traders worldwide today, spread all over the world. That is not. Women traders, yes, they are some of the best traders. Do you know why women make the best traders most of the time? Ego. They have less of it. It's not that they don't have ego. They just have less of it. So when the stock doesn't work and the stop is hit, the woman says, Oliver says, get out here. Okay, I'm out. But men are like, shoot, man, maybe it'll come back. Maybe it'll rebound. Maybe I should add. And so there's less of that. And so women tend to be more disciplined as well, naturally more disciplined. There are certainly personality types that can make trading a little easier, but you just have to have a reliable set of items that repeat themselves over and over and over again. Reliable set of items, proper trade management, knowing when to cut, when not to cut, when to add. In just a short period of time, you can now look at any chart in the world off the open and say, this is where I enter, this is where I protect myself, this is where I add, and this is where I'm taking profits. And that, imagine if you gave me 6 months of your life where I could take you. Now, I have to add one more thing here. You can't leave your original stop at the bottom of bar one as the stock progresses. You got to move that protection up. You don't want to lose a tremendous amount of your profit in the form of a sudden collapse. So we got to learn how to move that stop up. So I want you to look at all the big fat green bars on that chart. Look at the fat sizable ones. Look at that fat bar, look at that one, and then look at that one at the top. Every fat bar, you move that protection right under the fat bar. You see, healthy stocks don't eliminate their fat bars. Move that stop under. So right after you add above that little red bar, that bar starts growing, growing, growing. Boom, big bar, move the stop under the fat bar. And you can fat bar by fat bar your way to the promised land. Boom. Boom, fat bar, fat bar, fat bar, fat bar, out. Now, while you're raising your stop, you're also taking profits on 3 pushes. Don't think you have to be stopped out. The stop is just in case something bad starts to happen. But you want to take profits on the way up, not on the way down. On the way down is hitting your stop. That's just in case. But the ideal way to get out is with the momentum on the way up, and then you cancel your stop. You should know this by now. First fat red bar gets taken out by a green bar from a narrow state. Moving averages are tight. Your entry is above the moving averages, so you're doing everything in the right position. You get your 3 pushes, you're out of this. This is boring now. Boring. This is my favorite. I love going short. I love betting to the downside. By the way, guys, that's not what I predicted in Orlando. One of the biggest falls in history, I predicted this at a time when the market was at all-time new highs. So the reason that you can do this now, where were the moving averages on the NASDAQ or the Dow or any major index? How do they look? Together like that? They are so far apart, they can't see one another. The state is too wide. That's not the time to buy. The time to buy is when your state's narrow, right? I taught you that. But now you can apply that to anything and know you got to know your state. Then you got to know which events in the right state, in the right position. Remember, if you get those 3, your odds explode. All you need is money. So now we're going to bet this to the downside. 25,000 in, boom, short. Protection above the high, bar 1. Everything is in reverse now. Yes, we make more money on the downside than on the upside. Why? Because items fall faster and harder than they rise. Give me a short over a long any day and twice on Sunday. Boom. There's your entry. Look at the narrow state to the left of the chart. First bar is solid red. Under the low, trigger 25,000 in, protection above the high. Look at your first little green bar that forms, gets taken out. Boom, that's your ad. And you've got more money to the downside. All right, look at this. You guys know this. Right now, you can tell me to the penny where you put 25,000 in. Where are you to the penny, where your protection is, to the penny where you add, and now to the penny where you adjust your stop. Walk this stock down. Do it now. Fat bar by fat bar your way to the promised land. You got it? You see it? First stop on bar 1. Where do you walk that thing down to? The next big bar. See the next big bar? The next big bar. The next big bar over here. So I'd say something like boing, boing, boing. Okay, now there's one more I want to add. We're going to add one more stop adjustment and we're done. You're going to add the color stop adjustment, not just the big bar. You're going to add this. So every time you get the opposite color, when we're betting down, green is the opposite color. When you get the opposite color green, followed by 2 red, green, red, red, adjust your stop on top of the green. Green, red, red, adjust your stop on top of the green. Green, red, red, adjust your stop on top of the green. So now you've got big bar, adjust, color, adjust. You do them both, whichever one happens next. So your stop adjustments now go from the original stop at the top of bar 1. See the green, red, red, move the stop on top of green. You got it? Then what happens next? A big bar happens next. Move your stop from the green to the top of the big bar. After that, what happens next? Green, red, red. Now move your stop on top of the green. What happens after that? Big bar. Now move your stop on top of the big bar. And you can walk. This is professional trade management. Very few people, this is the highest level, very few people know how to manage the trade in between the buy and the final exit or the sell and the final cover. They don't know what to do in the middle. They don't know how to walk the dog. Now you do. Boring now. Eh? And it's supposed to be. If you are really excited, you're probably doing something wrong. Right? You want entertainment? Go to Disney World. But this is the same thing. It's not exciting. It's not supposed to be. What you do with your money should be exciting. But the same boring thing every single time, every single day, every single trade, that's what it takes. Being boring. I want to show you something interesting here. What if the bar is green under? What do? Your first bar under the moving averages is green. What do? Wait, drink coffee, right? All right, take a look at this. If it's green, boom, that's your entry, the removal of green. Now check this out. Check this out. This is cool. You're watching this 2-minute bar form under a narrow state. It's not full 2 minutes. Let's say it's a minute. Let's say it's 1 minute into its 2-minute life. You're watching this. You're just like, oh, green bar. But if that green disappears, boom, I'm in, right? Now, watch. It produced green in the first part of its life, 1 minute, but then 1 minute and 15 seconds less green. 1 minute and 30 seconds less green. And at the end, at the end of the green, boom, that's your new entry price. So now I'm teaching you how to actually go into the first 2-minute bar if it produces green first and then wipes the green out inside of the first 2 minutes. Do you understand this? So you are watching the market open. Green, 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 then less green, less green, less green, boom! Once the green is over, you get in at that point, stop above the high, and this is your drop. So normally, you would be getting in under the low of bar 1. No, you're now getting in higher because the first move was green, giving you the bottom of green as a reference point. And any time, whether it's the same bar or the next bar eliminates the green, you're in. It doesn't matter. We call this hidden green plays. The green is hiding from you. You start to add the hidden plays. Wow, the opportunities explode. There's that green movement first. Mark the low of the green. Boom! This green did not get erased the same bar, nor did it get erased bar 2, but it did erase the green bar 3. It doesn't matter. Boom, there's your entry. There's the first green bar. After your original entry point, mark the low, there's your add, boom, and the rest is history. What should you always do when your stock goes from narrow to wide? If you're in the play. You were in the play from narrow, now it goes wide. Should you still keep it? No. So, you see where I have the circle? Look at the distance now from the move. Look at the left when everything was scrunched together, and look at the move away, you should be getting out. So, the best time to get in is near, and when you get away, you should be exiting. Get in near, away, exit. It's not complicated. It's simple, not easy. Because see, the bars aren't moving on this chart, right? So it's easier. When the bars start moving and your palms start getting sweaty and butterflies start moving in your stomach and stuff like that. But it is simple. We go from a wide state, we go from a narrow state to the left to a wide state back to a narrow state. Can you play the wide state back to narrow? Yes or no? Yes. What kind of bars do you play from a wide state? Same ones. Elephant, boom. Bottoming tail bar, boom. So, which bar did you get here? Bottoming tail bar from a wide state. You can try that. Look at the elephant bars. Look at this elephant bar. Long as you're playing the right events and the right state, 87% chance of making money.